Okay, joining me now is a gentleman that is a frequent guest of our show, Capitalism Tonight, John Lai, the president of PetVivo, and a really interesting guest that we've had on before, not as frequent as John, and that is Chris Harben, a former colleague of mine at Nationwide Financial. He's now a professor of economics at Penn State University. Good evening, Chris.
Hey, how are you?
Good. So let's start with you. We'll also talk to John about this as well, but you just got back from London, and you said, hey, Jeff, I've got some interesting things I'd like to share about Brexit on your radio show. So,
yeah, we could probably go, and John probably knows this, we could probably talk about this for a week solid, and it was spoiler alert, I don't know what's going to happen. And neither do they. Quick correction, I'm not a professor of economics. I joke about those people. I tell them that they're the meteorologists of the financial world. I teach strategy and international business, so that's why I've been paying attention to Brexit so closely, because, you know, as a business, they're always trying to figure out, okay, what's our strategy? How do we enact and implement our strategy going forward? And right now in the UK, businesses are gouging their eyes out, because one of the coolest things about business is we always figure out a way to get through different administrations, different regulations. We could adapt when we know what the rules are. Right now, no one in the UK knows what the rules are. I mean, a good analogy would be if you've got a mountain stream coming down the side of a mountain, and a boulder falls off a cliff and lands in the middle of that stream. The stream finds a way around it, keeps going downhill. Right now, UK business knows there's a boulder coming. They don't know when, they don't know where, they don't know how big. It's kind of crazy.
John, you pay attention to the world markets, as do I. What's your take on the Brexit situation?
Well, pretty much what Chris has said, and I don't think the market is caring too much about London or UK itself as being a major effect on the overall outlook for the worldwide economy, as more focus is right now put on the China transaction, the China trade discussions.
And Chris, where do you think Brexit is going?
One of the things with Brexit is it's kind of, at least for me, it's overwhelmed all the interesting stuff that's going on with China. But, all right, so where Brexit is going, just for your listeners who might not know exactly, because this really doesn't get a whole lot of coverage in U.S. media, except for some of the titillating political gamesmanship that's been going on.
Or nerds like me who listen and watch Bloomberg and CNBC.
Oh, and I have Parliament Live TV on in my office all the time. It was great today because British politicians insult each other across the aisle, but it's all good because they sound so proper, and they do it by starting off by saying, "Well, my right honourable friend across the aisle over there is produced a piece of garbage that is," So literally he says stuff like that.
You almost have that down, Chris.
I'm working on it. All right, so Cliff Notes version, 2016, the referendum was passed asking the British people, do you want to stay or go, leave the European Union? And it passed 52-48 that they wanted to leave. It was a very simple question. And it was a surprise to the world because most people figured that the Remainers, the people that wanted to stay in the EU, were going to stay. There's a lot of interesting background about why this was. A lot of it is very similar to going on here and resulted in the Trump election. It's funny because basically there's this political bubbling that they feel like they were being ignored. The European Union was supposed to start off being a trade union, and there's all kinds of great reasons for countries to develop trade agreements and develop a trade union. They wanted to kind of function just like the United States, so I could trade from Pennsylvania to Ohio to Indiana and to Michigan without a tariff. And that's essentially how it works within the European Union. However, one of the things that started happening was European Union started to want to get a little bit too big for its britches. There was like a federal movement where they have a European Parliament, you have a European Court of Justice, and there was even talk of creating this EU army. And so people in the UK started getting really concerned about that. So fast forward 2 years, well, now it's been almost 3 years from that, but they triggered Article 50, which was the mechanism within the treaty that created that the UK joined the European Union, and they were supposed to be working on a deal. they just can't come to a deal. There's UK and the EU have agreed on a deal, but it has to be ratified by Parliament, and Parliament can't do it. And that's where we're at now. UK was supposed to get out on May 29th by law. They asked for an extension. The new extension brings them to April 12th. If they can do a deal, perhaps maybe May 22nd. Right now, they're arguing, literally as we speak, they're arguing about a bill that would prevent the Prime Minister from getting out of the EU without a deal. There's a lot of scare things going on. Oh my gosh, this is going to be the worst thing ever for the economy of the UK. I'm not so convinced that that's the case, because at least there will be rules in place. If the UK gets out without having a negotiated deal with the EU, business can then figure out, okay, now we know what the rules are. And by the way, there's like a £38 billion incentive to get out without a deal, because part of the negotiated agreement to leave, the UK paying the EU, basically a divorce settlement. So,
and John Lai, I get a kick out of this Brexit stuff because it only affects us for like a day. But generally, am I correct, it doesn't affect us a whole heck of a lot. Question number one. And the second question, John, is you've been right on for the last, 4 or 5 shows or forever. What's the latest in your world, and what do you see out there?
Sure. So let's address the Brexit. You got to look at the overall picture. It's significant to the UK and the regional area, but you got to look at the biggest headline right now is the 2 strongest economies and most influential economies in the world, and that's China and the U.S. China trade has dominated the market. 2 weeks ago when I was on the show, I talked about the Chinese market and increasing exposure within the China market. I mean, just within the last 2 weeks, we're up over 4%. In the China market, the U.S. market is almost up 3%, and we're 2% from all-time highs in the market. Now, the biggest news that have come out of the trade talks, and it's ongoing, is talking about free trade zones, great manufacturing numbers coming out of China, but this is the most important aspect of trade. If nothing else gets done, and this one item gets done, and that's forced technology transfer to China. Mm-hmm. U.S. companies have been losing hundreds of billions of dollars to China, and what that basically means, and I can relate it to PetVivo. I'm the president of PetVivo. A couple of years ago, we had discussions about our product being manufactured over in China for the cosmetic industry. Cosmetic industry in China is growing 30% a year for the last 5 years. We did a human clinical where we went head-to-head against Resolin, which is a derma filler, and our product compared quite well. Chinese company wanted to take our product and sell it into the cosmetic market. But the biggest problem is we couldn't do a deal unless we formed a new co over there, transferred our technology over there, and that leads to exposure where the technology can be stolen. You know, somebody can just walk out the door with our SOPs, hand it to a competitor, and the competitive product would be out the next day. And so there was no deal that can be done. So if this gets passed, there's going to be an expansion in trade and growth to the nth degree. Because if you look at fourth quarter of last year, most U.S. corporations in their public filings, 10Qs and Ks, said the biggest headwind is international trade and the slowdown in trade. And that's how we got this correction in the market. So now if we can expand that and say now we also have trade with China and the tariffs are off, you're going to see a second half explosion in earnings growth, where you're going to see U.S. earnings growth will exceed 10%. You know, back in December, I said, hey, many of these stocks are incorporating zero growth, and now we're incorporating about 5 to 6% earnings growth. I think we got potential to see 10% earnings growth, and hence we should see new highs in the Standard & Poor's 500 moving forward. So, you know, and the other fear last week was the inverted yield curve. And I've been saying the inverted yield curve is occurring because of flight to quality into the U.S. Treasuries and the worldwide central banks lowering their interest rates to stimulate the market. And China has done 2 stimuluses. They added liquidity and they about $1.5 trillion in the first move, and then they added significantly more. So as the Chinese economy grows, it reflects directly into the U.S. economy for growth. And I'm sorry for giving such a long answer, but it was these last 2 weeks has been quite exciting, and giving a much better outlook for the U.S. economy and the markets. And I'm believing that the second half in the U.S. here, we're going to see very good growth numbers, getting closer to the 3%.
Hey, John, Chris, can I ask you a question?
Absolutely.
Because I've been paying attention to this too. It's the China thing is fascinating because China having to do stimulus packages, fiscal stimulus inside their economy, but they're still growing at 6.6% GDP, which is slow for them. But one of the biggest issues, and maybe you know about this, one of the biggest issues with regard to the trade negotiations has really been this intellectual property issue, the IP. So if they get that worked out, you're saying floodgates start opening up and more companies will be willing to do trade with China, correct?
Absolutely, because the biggest fear we have always had, even from PetVivo's standpoint, is we invested so much in years into developing this technology, and the China market is great and large. If you're looking at cosmetics, it's growing 30% a year. We would love to tap into that market, but we can't because of the fear of them pirating and stealing the technology, and that's across the board. So
that's a real fear. Yeah.
Yep, absolutely. Well, it's not. I mean, there's so many lawsuits, and the problem is when you're dealing with China, the court system goes to the provisional court. And chances are that somebody's relative is on that court, and you're suing the company.
Right.
so yeah, it's not a good situation. So, and this week, they talked about, and that was one of the items that the Chinese said they were willing to really make concessions on and create more of a legal situation where there is recourse and honor the patents, the international patents, trademarks, and so on. So that would really spur worldwide growth.
Guys, we're out of time.
Really?
That's why you're frequent guests on the show. But Chris Harben, the professor. Well, Fran Tarkington went over a little bit earlier today, but we like to thank Fran Tarkington, obviously a Hall of Fame Minnesota Viking player. Chris Harben, the professor of international business at Penn State. And John Lai, the president of PetVivo, will have all you guys on again. And thank you for listening to Capitalism Tonight. Special thanks to station manager Roger Jacobson, coordinating producer Nathan Poole, executive producer Matt Beaver. We appreciate everybody on the show. We got some big news coming up next Thursday regarding the government project and the Esterville schools. We're doing a special sneaky good thing for the schools as well. So tune in next week on Capitalism Tonight, and always try to be a true capitalist.